Hi, everybody. Welcome back to my channel. This is Oliver Wiedmaier at Ollie_all caps on Twitter, founder of Voyage Trading Group. Today is December 11th, and I'm going to do a market review covering the strength of the market, the weakness in the market, where the market might be headed, where some potential support and resistance is, and talk a little bit about the effect that the potential rate hike coming up next week will have on the market. So the first thing we're going to do is look at a GMMA chart, and this is going to give us an idea of where the market is as it relates to slower moving averages and fast moving averages. So you can see this is a daily of the SPY chart, and we can see that the slower moving averages are below the faster moving averages, which is exactly what we want to see. But we can see that we've kind of made it high here, and we are turning back down. And that is exactly what the other leg downs have looked like when the market has topped or made a lower high here, rather. And so what we want to see is the faster EMAs trending above the slower EMAs, and we want to see a nice smooth trend with the slower EMAs. And so we're not obviously getting that at the moment. And so we did reject the 200-day moving average recently. So likely we see a next leg down. But as we move forward, we will see some different scenarios. This is the same chart. However, this is the NASDAQ. This is the QQQ. And we can see much weaker action here. The faster EMAs are have already broke down to the slower EMAs. And we can look at the same chart, but with the Dow. And we can see that after a nice kind of exactly what we want to see with the moving averages, it did put in maybe a top here at the 3,400 area. So something to monitor, but I don't love that the Dow Jones is the leader and that the NASDAQ is the lagger. Okay, so here's a candlestick chart of the QQQs, and we can see that we have been chopping around sideways, and the follow-through day on November 10th has held, and we are kind of holding this 278 support here. But for me, I think we're just going to keep chopping around in this area unless we make a break below this follow-through day, which then likely will cause us to have a that third leg down that we've been predicting. I can put up some moving averages on this chart, and we can see that the 50-day is still curled. And so we do have some potential support just above the low of the follow-through day. So the bull case would be a possible shakeout here, but we hold the 50-day, and then whatever the reaction to the Fed rate hike would either break below that 50-day moving average for a bear case, or rally higher, which would be the bull case. So I'm kind of looking at this 278 area, but my final kill shot will be that 273 area for the NASDAQ. And for the SPY, we can see a similar pattern, holding above this my kind of chop zone. I should make a right there. We can see that the 50-day moving average is curled up more significantly, creating a stronger support on the 50-day, opposed to what the 50-day on the NASDAQ looks like. But again, we are holding this area of the SPY 390. But again, we broke down. This is a fairly bearish candle here. And likely if we take out the 391 area, we will start testing some of this support here, and then ultimately have to test the strength of the 50-day moving average. So that's how I'm viewing the indices. And what I would like to do next is look at some sectors. Okay, so if we want to look at the industry performance filtered by month, industrial metals and mining, footwear, real estate, semiconductors, apparel, manufacturing, semiconductors, mortgage finance, resorts, apparel, and real estate development are the top 10 for the performance for the month, if we want to view per week, we could see that there was a pretty nasty week. The leader was paper, was paper and paper products, but they had a 1% month. So this is not something we're interested in. But again, we are seeing this industrial metals and mining. And so this is something that's had a decent quarter, positive year to date. So looking here, we would like to kind of find some names. We want to do some basic filtering, price over $10, average volume over 300K. And we can see we have about 9 names here that I'll be looking at to see if we have any sort of setups here to take. Quickly, I'll go to a basic chart, take the TA off, and then I will just see if this is too gappy. This is a terrible candle here, holding some support here. So this is something I would add to my chart and do a further technical analysis of that. Clear downtrend, but possibly taking out the 60 area as it's making kind of a VCP. So I would look at PLL at a closer look. SGML looked like it was set up, but it is taking out kind of this little cheat area here. So maybe I'll look at this a little bit further, but as of right now, quickly on FinViz, I don't think that it is set up. Tech not set up. They'll might be set up. That's something that I would look at on my charting platform. So we can take another look at the groups. We can look at sector strength. And so what I would do is go to sector performance and look at who's performing the best on a 1 month basis. It's actually technology, which is fairly interesting. So I would do the same exercise. I would go to technology, make some basic filters, perhaps price over $10, average volume over 300,000. I would also like to see the price above the SMA 200. You have about 104 names that I would then look at a closer, with a closer eye on my charting platform. Okay, so let's take a look at some ETFs. We do have an XLE, which rolled over. This would have been a nice short if you caught it after it retested the prior resistance and then rejected. This is not good because it has been the leading sector. So the oil names are showing relative weakness now, and so that's just something we need to take a look at. SMH, a semiconductor, right up against the SMA 200, does look like a reject, but we'll see maybe perhaps another test of the 21 EMA and see if that can act as support. But this is one of the leading indicators for me. If semiconductors are not performing well, I just don't find that the other leaders are acting well either. Take a look at XLV. This is the healthcare. This has been acting like a leader. It is trending the 8 EMA, having a little bit of trouble moving higher, but that 50 has crossed the 200. So this is an area that I'll be looking for some leaders. This is a weekly chart of the UUP, which is the USD index, and we can see that we have not been able to make it back over the trend line here, which is good for US equities. We want to see the dollar becoming more weaker, which will give a better opportunity for equities to begin being invested in by large institutions, which would be bullish as traders, because we want to ride the volume as the volume starts to come in from the institutions. So this is bullish. We will see on a daily chart that it did make a higher low, So I'm interested to see if we can continue making higher lows or making lower lows. But ultimately, if we can find some support down here, maybe trade sideways a little bit, that would be bullish for us. Now we take a look at the VIX. We did get all the way down to about 19 on the VIX, which is very bullish. And so I expected for a little bit of a bounce. As long as it's holding under the 25, I find that to be a bullish case. Every time we do get into this area, though, we do have a spike. And so I'm interested to see if we see another spike, and then if we get that final blow above 40. This is something that I've been speaking about for months and months and months. I think that if we have a spike above 40, it would be the final nail in the coffin for all of the bulls, and then it would pave a road for new money to come in and start the new bull run. So this is something I'm watching very closely. Lastly, we'll take a look at a couple leaders. We had this really big breakout on December 2nd on N phase. It held one day and then it's broke down and is looking more and more weak. This was a big signal to determine whether breakouts were working or not. Unfortunately, we had a few days of strength, and then the leader did roll over a bit. We can see the same thing with Monster. We had this big breakout, a retest, another big breakout, and now it's failing back down below the pivot. Another example of failed breakouts in leaders. Oxy was a leader for a very, very long time, but now trading below its 200 SMA, which is a big red flag. One last leader we'll take a look at is Amgen. It was setting up this nice high tight flag on this earnings gap, but now has broken below. And so this is what we're seeing over and over and over. We are seeing lots of leaders slowly rolling over and broken charts, which is not what we want to see for the bull case. However, it is the environment that we are living in. And so all I can say is trade very, very small if you're trading at all, and make sure that you are carrying very little risk overnight. I'm personally in cash and plan to be in cash all of this coming week, unless we see a follow-through day after the Fed speak on, I believe it's Wednesday. If the market reacts positively and we get a follow-through day, I will buy just a little bit, possibly 5 or 10% exposure, just to participate in the follow-through day. However, if the market, I'm not going into FOMC with any risk at all, because this is the last one of the year, and we are in such a pivotal point in the market. Any downside might have some high veracity, and it could really spike lower very, very fast, and I don't want to be caught in that. And so I'm all my education members and my members in my mentorship group, we're all in cash. We're waiting for the decision and to see what the reaction is to the decision from the Fed on FOMC. So thanks for watching. I really appreciate it. If you want to join the trading group, the Discord link is down in the description. Great community, learning how to build systems and rule-based risk management approach to trading to keep us out of moves like this and keep us with our head above water, especially in this environment. So thank you so much. Be safe out there, guys. Take care.